Hi everyone, this is Herm and I'm glad you can join us today. I'm going to show you in this presentation a live trade that I made risking $1,200 and making $90 profit, which is about 7.5% in a little bit over an hour and a half of trading. And I practiced this. I actually did this 5 times in a virtual account using the Thinkorswim on-demand tool, which I'm going to show you momentarily. And I made 5 trades, practice on random dates, and I was profitable in each one of the 5. So I said, man, I tell you what, this can't be that easy. So I went live on July 10th, and I did 1 trade, and what I'm going to start out with right now on the screen. Let me show you what I did. This is my live account. I opened an account just to tinker with the straddles and some other trades. So I had started with $5,000. Here's the details on the straddle for the Apple on this particular day. So the market opens, Apple gaps up about 4 points. So it's around 9:35 in the morning. So around 9:55, as you can see on the date right here, this was my opening trade. I entered into the straddle, and at the time Apple was trading around $617.75 thereabouts. It was jumping around. So I entered into the straddle, and it cost me a debit of $1,200, as you can see right here. Here are the actual prices for each side of the straddle, and it was for the second week in July. These are weekly options, 2012, and the strike price was $620. I chose that particular strike price because the 617, it kept fluctuating, 617, 618. It was closer to the $20 on the strike price, and these are $5 difference in the strike prices, so the next one would have been $615. So I chose the 620 July call option. Today is Tuesday, so there's really only like 3 days until expiration, and we're not going to hold these straddles for any length of time. We really want to hold it maximum a day and take advantage of that volatility and the pricing increase, which is really hard to believe that the value can increase on one side so much that you can close out and lock in that profit at any time. So I'm going to go into that in detail. So let me show you how I closed this. I did close this at, you can see the time right here, 11:10, and closing transaction here. And this is how much I received. Now, if you notice, price of Apple started to drop, and got down to around 614, and it was close to 11 to keep in mind in order to plan your strategy. Now, I will say this: it doesn't matter with a straddle which direction the market turns or goes, in this case Apple, as long as it moves, say 5 points in one direction, you're in the money. Now, you certainly will be in the money before that, but I'm just saying that we're trying to make 5 points worth of profit for the option straddle for 1 day's worth of trading. That may happen in a few hours. So that's a really, really important factor to remember here. News will impact your outcome, and it may fluctuate up and down. I look at the 11 o'clock in standard time because the European markets close at 11:30. Usually something happens. They may start a buying frenzy or selling frenzy before they close their markets. So if I'm able to get some easy points in the morning, I have a nice profit built in, that I can close it at 11:30. Otherwise, the next opportunity would probably be in the afternoon at 3:30 before the market closes. That's the idea here. You look for opportunities to lock in your profit and take it off the table. So now we need to look at which expiration date we're looking for. We're talking about weeklies here. Let's see how close we are to the expiration. We open up our jump to, you can see, oh, it's the 18th, the next day. So let's find out how much the straddles are going for. I put up the option tables. In fact, you want to see it's 1 day away from expiration. The current price is 541. Closest strike price is 545. So I highlight the calls column, 545 strike price. Right click on my mouse, do a buy on the straddles, and you can see right now the current price is limit price of 1025. Go ahead and lock this so it doesn't move around. Come over here underneath the straddle, do a right click on the mouse, confirm and send. So let me show you what we have here. Buy one straddle, the call and the put at the 545 strike price, and it's even telling you how much the break even is, but that's not accurate. And it's going to cost us $1,025, $10.25. So go ahead and press send. Because we have the virtual approved, press play here so we can have the clock ticking and we can see what the trade so far is doing. The price at 11 o'clock, it was at $538, and we had potentially some profit here, and it needs to go down. That's the live price here. So it needs to go down a little bit more. So let's go to the 330 and what the potential for the profit was. So let's put you on pause and let me buffer this. So much to my surprise, when I moved this to the afternoon, 3:30, you can see this is on the 17th at 3:30 on that particular day, May 17th. The current price now, lucky for us, is live price of $532. We needed $535 as a break even to make some kind of money on it. We would have made $212 at the $5, but it's actually below that, so we actually have a profit of $390.04. We're going to take that and close the order. So if we highlight these two, do a right click, create closing order, which we can sell one leg of it or both. Let's close both of it out, and you see we're now going to get paid $1,415, and we paid something in the order of 1,000 something. So minus commissions is not bad. So of course, if we confirm and send, and there it is, we would close out, and you would have that profit in your account. So if you look at the trade and the monitor, we have our profit, $390 after commissions. And that's pretty much it. I mean, every time I've done this, I mean, you can choose this, pick up the software and practice and prove it to yourself. I did it live and made money today, but in hindsight, I would have made close to $300 something also, because as I'm speaking, Apple is down to 614, so I left a lot of money on the table. Try this on your own, and that's it for now.